Hello guys, Trader99 here. Today we're gonna discuss the technical analysis for George Soros' 1992 September 16th Black Wednesday trade. The first thing that he did was he drew his line of support and resistance. So you can see a resistance line right here. This was an area where price reacted very strongly and then moved down on almost 4,000 pips here, you guys, before bouncing all the way up here. When he saw that price had reached this level of resistance, he then plotted his support line. Support line 1 over here, support line 2 over here. These are all lines of support because you see it used to be resistant lines. So we got two very strong areas of support. The next thing he needs to know is he in the right trend? Is he in the right trend? How does he know he's in the right trend? He has to plot his moving average lines. The colorful lines are the moving average lines, and he plot at least 5 moving average lines because that will give him a clearer picture. Price starts coming down these daily moving average periods. These are all daily moving average periods. This is a daily chart. So now he knows that he is in a downtrend. So he checks his momentum. He looks into his MACD and he sees a crossover. The histogram has gone below the zero level. It's gone below the zero level. Then he opens his awesome oscillator and he sees that that is also in the red and is about to cross zero. And exactly on September 16th, and then he told all his friends, hey guys, look, this area here is a very high area of confluence. This is a very high area of confluence. So all of his friends started shorting from this position and it went down close to 6,000 pips from the top. This was a 6,000 pip epic move trade by the OG George Soros. This gave him legendary status and made him one of the greatest traders of all time. And this made the Bank of England one of the biggest bag holders of all time. He also famously said that he had a stop loss. I believe that his stop loss was in this area here above the lines of resistance. In 1998, he tried to do the exact same thing with the Hong Kong government. But little did he know that Hong Kong was a stable coin and he was unable to break the Bank of Hong Kong. Look at the chart for Hong Kong. It's like a stable coin. It doesn't move much. It will never move because it is pegged to the US dollar at that time and it had huge Chinese support at the time. So the governments were able to beat George Soros at his own game. But what did he do before he was beaten? He plotted his lines of resistance and support. He drew his moving average lines and he could see in 1998 the price was starting to move below the moving average lines and he could see that the awesome oscillator was in the red and about to cross down the red line. Not only that, but he also looked at the MACD. There was a crossover. There's also a crossover here and he probably saw some momentum down here and he thought, okay, I'll short it. He was wrong. Hong Kong was pegged to the US dollar and the Chinese government pretty much made sure the Hong Kong dollar never crashed. I mean, look at last year during COVID, didn't do anything. I mean, this little crash here is only about 24 pips, not a big deal at all. So George Soros got out of this trade. He took a L. And what really happened was that he was wrong on a fundamental level. And that's why doing technical analysis on this chart is actually completely useless. And just because the signals are there doesn't mean that it's a guaranteed win. Trading is a game of probabilities. And if you don't learn that trading is a game of probabilities, you are at risk of losing all of your money. Always make sure that you cut your losses and manage your trades. I hope that you've learned something useful today. If you like our content, please like and subscribe, and I'll see you in the next one.